Guys, gold is making a new high, but silver has not kept up. Is silver just about to make a huge run like all the bullion dealers have been saying every day for the last 40 or so years? Or is it pretty much a lost cause, especially because of this one thing? Now, if you are a coin collector, this video is not for you. But if you buy gold or silver because it is strictly an investment or an insurance policy against the US dollar, then this video is for you. Now, I know it is very hard for a lot of people to be objective about something that they already own, so they only look for the good things and don't look at the bad things, but I'm going to be very objective here. And so the argument some people might say is, well, you own silver, so why are you talking bad about it? Well, if I can't debunk the bad points about silver, then maybe I shouldn't own it, right? So I actually own silver, and I've been into coins and silver since like the early 1980s when I was like 10, 11 years old. But I really started investing in silver as kind of an insurance policy or an alternative to the dollar, probably around 2005, 2006. And probably the last silver that I bought was from Tulving, the online dealer that ripped everybody off. And I think I got my silver from Tulving just maybe a few weeks or a few months before they shut down and ripped off a whole bunch of people. So that's how far back I go. This was, I think, 2011 or 12 or something like that. But just because I own a lot of silver doesn't mean that I think it is a good investment. And so I'm going to tell you and show you why. So let's start with the most objective part of the argument against silver, and that is, has it kept up with inflation? So let's take a look. Now, people who either have a vested interest in having you buy silver, or people who are already invested and are trying to kind of justify their investment, always cherry pick places where they say they bought silver. Or if you look at silver from 2020, it was $15. Now it's $25. That's a 40% return or something like that. Okay, that's cherry picking. Let's go look at going all the way back to when silver was first allowed to start being purchased by retail investors back in the late 70s. So you see, in the 1980s, it had a run up to $50 an ounce when the Hunt brothers were trying to corner the silver market, but then it fell all the way back to $5 an ounce, and it's been sitting somewhere around $5 an ounce for all that time until probably around 2004. Now, around 2011 was the big run-up with the so-called JP Morgan squeeze, buy an ounce of silver and squeeze JP Morgan and all this stuff. And it also ran up to about $50, but quickly collapsed. So now, all this time from 1980 or from 2011, there has been inflation every year. So let's see what the inflation-adjusted price of silver should be today. So if you use the 1980 price to run up to $50, starting in 1980, ending in 2024, what should the price be today? Inflation adjusted is $188.30. So if you bought in 1980 at $50, unless silver gets to 188 tomorrow, you are down a whole lot of money. Now let's look at 2011. The same run up in 2011, it was a high of $50. Let's see what that's worth today. $68.98. So basically, silver has to get to about $69 for it just to equal the high of 2011, 13 years ago. Now, is gold any better? Let's take a look. In 1980, it went to about $800 when silver went to $50, and then languished as low as like close to $200-300. And in 2011, it made a high of about $1,900. So let's see what that is inflation adjusted today. So 800 from 1980 is $3,012 today. So even though gold is at a new all-time highs, it still hasn't surpassed the inflation adjusted high from 1980. Well, what about the more recent high in 2011 at 1900? Let's see what that should be right now. So that is 2621. So gold has not yet even surpassed the high from 2011. So if you bought at $1,900 in 2011, you are still down money because you lost to inflation. Now, if you silver and gold bugs are honest with yourselves, and I am one of them, I realize that the price of the Dow Jones Industrial Average in 1980 was about 800, which means that 1 ounce of gold will buy 1 share of the Dow Jones Industrial Average back in 1980. So where's the Dow Jones Industrial Average today? It's close to 40,000. So that means if you had $800 in 1980 to buy the Dow Jones Industrial Average or gold, if you bought gold, you would have $2,200 today, but it should be 3,000. But if you bought the Dow Jones Industrial Average, you would have close to 40,000. So that is about 13 times better than the inflation rate. That's just a fact. Now, anybody could go back in time and look at the thing that increased the most compared to some other thing and say, I should have bought this. That's not what I'm trying to do here. I always say you shouldn't put all your money into any one thing. So to have some gold or silver or stocks or real estate or bonds or whatever is a good diversification because nobody really knows what's going to happen in the future. And so while gold hasn't exactly kept up with that inflation from 40 years ago, it has done kind of decently, and it probably helps people sleep at night. I know it does for me. But as for silver, you cannot objectively look at that and say it has kept up with inflation. So here's the problem with silver. When there is no inflation, it doesn't go up. And now when there is inflation, it still doesn't go up. So when exactly is it supposed to go up? And so this is where a lot of people who are heavily invested in silver and see it as kind of their savior, that it's going to go up to $200 and save them financially or put them in a better position. They try to rationalize away the fact that silver is 50% off of the high from 2011, not even including inflation. And so their argument is, I don't care what the price of silver is because I'm not selling today. And I know that it's going to be X amount, 100, 200, 500, whatever number that they read some article from somebody who's getting paid probably by a bullion dealer to put out there, they anchor this in their mind. And so even though the price objectively tells them that silver has gone nowhere and is even down 50% from 2011 even, they still hang on to the hope that yes, it's doing nothing, but the day before I'm ready to sell it, it's somehow miraculously going to be $100 or $200 or something like that. That is a very bad cope. That's the same kind of cope of people who say it's not a loss until you sell it. It is absolutely a loss if the current price is less than you paid for it. Ask any of the people that held all the way down on stocks like Enron and WorldCom and Lucent and Northern Telecom and all these stocks that eventually went to zero. A lot of these people just covered their eyes and said, I don't have to look. I'm just going to hold it until it comes back, and it's not a loss until I sell or until the stock goes bankrupt. Now, this is not exactly the same for silver, but it's not that far away, because if you should have $188 from the highs from 1980 and you only have 25, that is a huge loss. But silver investors are being influenced or conditioned to hold on to it at any cost and never sell it. And that's kind of one of the reasons why I do videos of going to coin shops and selling silver, to see what you will actually get for it when you sell it, because it's only worth what you can sell it for today. But the industry that sells you gold and silver wants to make you believe that you should just put it away and then give it to your heirs. You know who also did that? The diamond industry. That's right. The diamond industry in the US is all based on marketing, and diamonds are not even scarce. And so the problem the diamond industry had was, what happens to the diamonds that women get for their engagement ring when they're 50, 60, 70 and they no longer need it? All of those diamonds are going to come back into the market and flood the market and drive the prices down. So what slogan did the advertising agency for De Beers come up with? They came up with, a diamond is forever, meaning It is an heirloom. You should never sell it. You just pass it down to your kids and their kids and keep it in the family. It's an heirloom. That's kind of what they're doing for silver. And it seems that a lot of the way this silver works is people buy at high premiums because they buy eagles and fancy coins and stuff like that at 20, 30, 40% premiums, hold this stuff forever. And most of the buyers are guys. Let's be real here. And so they die off, and either their kids or their wives don't know about the silver, don't know about what prices they paid for it, and just sell it back to the coin dealers or the bullion dealers at spot or even below spot. And the cycle rinses and repeats again with a new generation of investors. But here is where that is changing. You see, a large portion of silver collectors are a certain type of person. Now, don't get offended, but a lot of people who buy silver buy it only because gold is too expensive, they think. And also they think silver is going to have a larger percentage run up when gold and silver run up. And that's usually the case for a brief period of time. But the type of people that buy silver are the type of people that say, hey, look, I only have $1,000. If I buy $1,000 worth of Microsoft and it goes up 10% in a year, which is customary, I only make $100. That's not quick enough. I need something that's going to go up 10 times my money. And so those people used to go buy penny stocks or get enticed into penny stocks and get scammed that this stock is going to go from 10 cents to $1 and you're going to make 10 times your money in a month. Why wait for Microsoft? Those are the same type of people that are also been enticed into buying silver. Hey, silver was $5 in 1979 and it went to $50. That's going to happen again right around the corner. And there's all these paid research reports out there predicting the exact thing, and you see those come out every day, every month, every year. And so those type of people that didn't have a lot of money but wanted to get rich quicker than the slow way of putting it into an index fund or something like that, they are drawn to penny stocks and silver over gold. And just some advice, if you're the type of person that says, well, I buy silver because I don't have enough to buy gold, so every month I buy 3 ounces of silver or something like that. Or some people say, hey, every month I buy 1 10-ounce of gold. I buy a 1 10-ounce American Eagle, and that's my investment. If you are doing that, you are losing a lot of money. Let me explain. The 1/10 ounce American Gold Eagle is about $310, which means you're paying about $3,100 an ounce for gold when gold is about $2,250. That's about a 38% premium on the price of gold, when you can buy gold for about a 4% premium if you buy like a gold bar or maybe a gold maple leaf or a Krugerrand or something like that. So if you really only have $300 to invest every month and you want to buy gold, don't buy that 1/10 ounce. Put the money in the bank, and in 8 months, you'll have $2,400, and that will be enough to buy a 1 ounce full gold coin or bar or something like that, because gold is not going to run up 38% in 8 months. The same goes for silver. People paying 30, 40% over spot to buy silver eagles. Don't do that. Save up your money until you have enough to buy a 100-ounce silver bar for 5-10% over spot. So again, I'm not saying you should never own silver or gold, but don't buy it in small pieces because you are highly overpaying for it. And since it doesn't keep up that well with inflation, you're going to lose double when you go to sell it, because you're going to lose the premium and you may lose to inflation. But now on to the number one reason that silver is not keeping up with the rise in gold and the rise in inflation. And I'm sorry to say, but that is Bitcoin or crypto. You see, those same people that were 20 years old in 1980 and saw the price of silver go from 5 to 50 and gold from whatever, 300 to 800. Those people were stuck in the, I'm going to ride that wave again on gold or silver or penny stocks, because that was the thing back then. Now, the people that are 20 years old coming of age in 2010, 2015, 2020, the majority of them are not going to buy silver for that magic lottery ticket, especially since those type of have been playing video games where they've been conditioned to buy digital assets in video games. So they think nothing of paying real money to buy, I don't know, some gun or some power level or some house or something in some video game. So those type of people that are looking to get rich, they also only have 1,000 or 5,000 to invest and don't want to buy Microsoft that goes up 10% in a year. They want something a lot quicker. And the marketers that are selling these cryptos or whatever get rich quick scheme is out there, NFTs, cryptos, they know that. And so that's who they're marketing to. So a lot of that money, the new generation that would normally be coming in to buy silver and penny stocks are not buying that. They're buying crypto because that's their new lottery ticket. So guys, those people that were coming of age in the 1980s and 1990s, they were either looking to get rich quick or they were worried about inflation and they were buying gold and silver. The majority of those type of coming of age people these days are looking at Bitcoin and crypto as their kind of either get rich quick or keep up with inflation type of asset. So just be aware that this is a huge shift of the potential investors in silver and gold are now going to crypto. Now, I'm not saying you should sell your silver or gold, but I am saying, one, if you're going to invest, do it wisely and don't pay high premiums. That means buying 1 ounce or more for gold and buying 100 ounce or more for silver, or not paying more than really 10% over spot for silver. More like 5% these days, it seems. And another thing, it seems investing in silver and collecting silver and being entertained by silver collecting videos are kind of intertwined these days. It kind of blurs the line of, are you an investor or are you a collector, or you just like getting entertained by somebody opening a new package of some shiny new silver coin with a nice design or something like that. So if you're going to bet your financial future on gold and silver, which I don't think you should do entirely, right? You should diversify for sure. But if part of your investment strategy is to own some silver and gold, do it strictly as an investment with an eye towards paying the lowest premiums possible, because you will not get most of that back when you sell, as you see from my videos. And keep that separate from being entertained by all the silver stacker type videos you see on YouTube that also are getting paid by the bullion dealers to promote all these different kinds of silvers that have higher premiums than just buying a bulk 100 ounce bar of silver. It's kind of like the supermarket. They have very low margins on 20-pound bags of rice. They make much bigger margins on smaller boxes of rice-a-roni or potato chips, cookies, sodas, all that other stuff. To me, it seems like precious metals has kind of become like professional wrestling compared to actual wrestling. It's a lot more entertainment and fluff than actual investing. And proof of this is things like these gold foil dollars or something that are literally worthless, and other things like copper coins where they're selling a 1 ounce coin for about 30 times more than the price of copper per pound. This is strictly entertainment or collecting or whatever you want to call it. It is not investing. Please separate the two if you want to have a good financial future. And if your argument is, well, I can't afford a 1 ounce gold coin, so I'll buy this $10 gold foil bill that looks like some old bill from the 1800s or something like that, or I'll buy 10 copper 1 ounce coins for $20. If that's where you are financially, you are much better off turning off the YouTube channels, not watching any of those channels, and going and working more hours, getting another job, getting another skill, starting a business, doing something else to make more money. If you're spending hours and hours focused on investments of should I buy this $30 coin or that $30 coin, and your whole investment doesn't even pay 1 month of rent or living expenses, you need to focus more on earning more money or cutting expenses out of your life or something along those lines, because worrying about $100 a month in silver is not going to change your financial picture in a big way, one way or the other. So guys, take it with a grain of salt when somebody who's in the business of selling you gold or silver is telling you that it's a great investment. Don't trust them. Trust your own eyes. See what these investments have done over a long period of time. Don't think you know it all, because nobody knows what's gonna outperform in the next 10, 20 years or whatever. So have a little bit of everything. And if they all go up a little bit, great. If only one goes up a whole bunch and the other don't go up so much, you're still kind of covered. So don't put all your eggs into one basket, and for sure, don't put all your money into silver, especially if you're paying these huge premiums. And just like a stock that was $50 and fell to $25, there's a lot of overhang on that stock. What that means is there's a lot of people that bought at 50, at 45, at 35, at 40. So as silver goes up, if it goes up, there are going to be a lot of sellers at every level. There are people that bought at 30, 15 years ago and are saying, man, if it ever gets to 30, I'm selling everything. So to get above 30, it has to absorb all those sellers that are waiting there. The same thing at 35. There are people that bought at 35 and said, man, if this thing ever gets to 35, I'm going to sell everything. So silver has a whole lot of overhang above it to get to higher prices, because there are a lot of sellers out there. Now think about it. If you're one of the people that bought Silver Eagles a year ago for $45 or something like that, the price has to get to $45 for you to break even. That is a huge price increase. That's what, 80% from here to just break even on something you bought when the price was 25, but you paid 45. Apple is trading at $170 right now. Would you pay 80% higher for it just because they gave you a nice printed certificate of your Apple shares or something like that? Well, some people probably would, but it is not a smart thing to do when as soon as you buy it, you can only sell it for $170. Same with silver. Don't buy something that's $45 when you could only sell it today for $25. I know I am making a lot of enemies today with the bullion dealers and the YouTube channels that push bullion because they're getting paid by the dealers, but that is just a reality. I'm not against gold and silver. I'm for buying it smartly and not putting all your money into it thinking it is going to be your financial savior one day. No one knows what the future holds. Diversify.